traders, what to expect from your dollar next week? In this video we will analyze the price action, we will analyze the structure, we will execute the top-down analysis together, and I will try to explain to you what I see on the pair. Also we will make a couple of forecasts here, and I will show you how I'm planning to trade it. So don't forget to like this video, subscribe to my YouTube channel, and let's start. Alright traders, I want to start with the weekly time frame. On the weekly time frame we see the price action since summer 2020, and here we can spot a very important thing that happened recently. As you can see, if we look left at structure, you can see that here we have a very strong horizontal weekly structure support. And you can see that in the past, in 2020, 2 times that structure was respected, and 2 times we saw a very nice bullish rally from that structure. What happened recently? You can see that the market violated that structure to the downside. We got the breakout of that structure. With this high momentum bearish candle, the market closed below that structure on the weekly. And then for the 2 consecutive weeks, we were trading below that structure. What it tells us? It tells us that the market is bearish. It means that if previously euro dollar was trading in this ranging market, yes, on a weekly we were trading in this global horizontal trading range, this breakout signifies the predominance of bears, yes, and their willingness to push. For that reason, we are very bearish biased on the pair, yes, and we are looking for shorting opportunities. We believe that after this breakout, after some bearish accumulation, bears will try to go to lower structure levels. So with that in mind, let's analyze lower time frames. Hey traders, if you want to see how I analyze the market live, if you want to see how I trade live and how I execute the top-down trading strategy, I want to invite you in my premium educational group. There I do live streaming for my students, and there I run live Q&As for them. So if you have any question, you can always ask me there. We have a live chat there, and during the live stream you can ask me naturally anything. You can ask me how to trade the pattern, or you can ask me how to analyze some financial instrument. I will be happy to do that. For more details, check the link in the description below. It is vasilytrader.com/private group. Check that, and let's continue. We are on a daily time frame, and on a daily time frame it is very important for us to execute the price action analysis. By the price action analysis I mean that simply we follow the recent legs of a move. We follow how the price acted in the past, and with that we are trying to get what is happening with the market. Yes, so you can see here I simply spotted the sequence of impulses and how I apply them. First of all, definitely we can conclude that on the daily time frame here we have a bearish trend. Yes, we have the lower highs right here and lower lows. Yes, and moreover, if we pay close attention to the lower lows right here, we can even spot the trend line based on them. Yes, here we have this very nice falling trend line serving as the support, and you can see how perfectly for now buyers are buying from that trend line. Yes, no surprise, recently we touched that support and then we saw a very nice growth right here. So we spotted, first of all, in the weekly time frame we are bearish. Yes, we concluded that we are bearish biased, and on a daily also we are bearish. We have a bearish trend right here, and for us it is crucially important right here to find the last low high. Here's our last low high. Let's underline that together. Why the last low high level is so important? Because the area, the zone between the last low high and current structure low is the so-called bear zone. So even if bulls can push within the zone, even if we can see a bullish continuation within the zone, we will still remain bearish. Yes, and even if the price reaches the upper boundary of this area right here, we still will look for shorting opportunities. Yes, but also we must remember that bearish continuation, the trend following movement, can start within any point within that area. And with the structure analysis, let's try to identify the potential points from where a strong bearish rally may start. And what I did right here, I took away the zigzags, because I guess without them it would be easier for us to spot the key levels, the key structure levels. So where is our first strong structural resistance? Let's look left at structure. Look at that point right here. From that point, in the recent past, we saw a strong bullish movement. Yes, the market bounced nicely from that horizontal structure support. And moreover, you can see that the market is testing that structure at the moment. And we already see the rejection from that. We saw the bearish engulfing candle right here. So definitely for sellers, that structure is important. And a bit higher, we have one more important point. That structure right here. Yes, you can see that it is the so-called minor structure. Just in the recent past, we saw the pullback from that structure and then the market dropped. So in my view, here we have the so-called the zone of supply based on the major structure and the minor structure. And here we will look for the confirmation to short from the structure, expecting a bearish continuation. And what will be the confirmation we will discuss after we spot all the key levels right here. So what will be the next key level? Again, let's look at the structure. Over here, look at that key level. Very cute key level. Why? Because in the past, 1, 2, 3 times in a row, that structure was respected. It was a very strong support. It was a very strong resistance. Just in the recent past, once the price reached that structure, we saw a very strong bearish movement from that. So definitely, it is a key level. And again, from here, we will try to catch a bearish wave. And the last resort for sellers is the last lower high level. Yes, it will be the last key structure from where we will look for shorting opportunities. And what is our plan right here? So our plan is the following. We'll let the price reach the first resistance, and then we are looking for the confirmation to short from here. Yes, in case if we don't see any confirmation, in case if the price goes higher, in case if the price violates that key structure to the upside, we are looking for the confirmation based on that second resistance. Yes, here, analyzing the intraday time frames, we will look for the confirmation to short. And same thing will happen in case if that structure is broken to the upside and it reaches that lower high level, the last lower high level. Here again, we will look for the confirmation to short. What do we mean by a confirmation? By a confirmation, we mean the reversal pattern being formed on a 4-hour or 1-hour chart, so based on the intraday time frames. And when do we look for the confirmation? We need at least the touch of the underlying structural resistance, yes, and then we are looking for the confirmation to open short position. You can see that just recently one of the key levels that we spotted was reached, so it is the trigger for us to look for the confirmation. So let's analyze the intraday time frames and discuss what will be our confirmation to short the market safely. What is happening on the 4-hour chart? On the 4-hour chart, you can see that the market here is trading in a local bullish trend. We have the initial bullish impulse, the retracement, and then the second bullish impulse with the new higher close. So here the market is bullish. And if we pay close attention to the higher lows and higher highs right here, we can spot the channel. You can see that right here we have a very nice rising channel. Yes, and so far, while the market is trading within this channel, definitely the market remains bullish. Yes, and moreover, here we have the perfect example of the so-called flag formation. So here we have the bearish flag pattern, and as you know, the trigger for us to short is the breakout of the flag support to the downside. But is it enough for us to just see the breakout like that? Yes, is that enough for us to sell? Not really. Quite often, if you just rely on such a breakout, you'll be caught by a false violation. You need something else right here. What do you need right here? You should look left at structure. Here you can see that we have quite strong horizontal structure shelf. Yes, quite strong horizontal structure support. You can see that so far, many times in a row, that structure is respected. And moreover, looking higher, you can see that we also have minor structure resistance in right here. Yes, we have the so-called double top formation right here with the lower high. So what will be our safest confirmation to short euro-dollar? We need the bearish breakout of that horizontal structure and the support of the flag formation. So we need the breakout of that entire blue area. We need the 4-hour candle close below entire blue area to confirm the coming bearish rally. And only then, on the retest, we will look for shorting opportunities. Yes, that is the plan. So where will be our stop loss right here and will be our target? Shorting from a retest of the broken horizontal structure. By the way, I will short right here at the retest of the horizontal structure, not the broken support of the flag. Yeah, my stop loss will lie strictly above the highs of the pattern. Yes, above the highs of the flag, above the highs of this double top. And my initial target right here will be the retest of the current structure. Yes, so you can see we can get around 1.75 risk to reward for the initial target. Yes, again, I say that again. We need the breakout of the support of the flag and also the breakout of this horizontal structure right here. The 4-hour candle close below that blue area. Only then we short on a retest with the sell limit order. Our first target will be the local structure level. Our break-even point, the point where we move our stop to entry, will be a bit higher, around 1.155 level. Once the price reaches that level, we will move our stop to entry. Once the first goal is reached, we will close 50% of our profits, and the rest we will keep for trailing stop. As you remember, on the weekly time frame, on the daily time frame, we are very bearish. We discussed that we expect a strong bearish rally. So the rest we will keep for bearish continuation, yes. And our potential next target will be the trend line, yes, the major trend line that we spotted on a daily time frame. You can see that with time, it is going lower and lower and lower. So who knows where exactly will be the target. We will just adjust it based on this falling trend line. And what do we do in case if the flag is not broken? What do we do in case if the market goes higher? Remember that if the price violates our major yellow daily structural resistance to the upside and goes higher, then we will wait for the test of the second resistance. Yes, and there again we will look for the confirmation to short. If there is no confirmation, we don't sell. Yes, that is the plan. That is how simple the top-down trading strategy is. Right, traders, so even if locally the market is growing, you can see that based on the long-term perspective, based on the mid-term analysis, we still remain bearish. And next week we will try to catch the bearish movement right here. Even if you see the local bullish moves, don't forget about the global perspective. You must remember that what matters is the global perspective. Yes, and the short-term price fluctuations are not that important. For more insights, for more tips, for more analysis, don't forget to check my premium educational group, the link in the description below. Please like this video, subscribe to my YouTube channel, and please let me know in the comment section what do you want to learn in the next videos. I always read your comments, so please help me. And thank you so much for watching.